Hey everyone, my name is Yuan Cheng. I'm here to present to you DLocal. So DLocal is the unwanted fintech that has a 100% upside. So what does DLocal do? They are a payment processing platform in the B2B space, and they bring customers into the emerging market. Now, so far, the market has not put any spotlight on it yet. I believe with the new management, they will direct the company to bigger success. Disclaimer, I'm not a financial advisor, and everything I put out in this video is not a stock recommendation. All I want to do is to bring my experience and the education content to help you understand the stock market better. Here is what I cover today, from what does DLocal do all the way to the conclusion. If you stay to the end of the video, you'll get to understand my valuation and my conclusion about DLocal. Here's my framework, and here's what I believe. All of us want to have quality businesses to make money work hard for us. In order for us to do that, we have to weigh the risk to reward in every decision that we make. Should you choose to buy the company, here are the 4 pillars that you need to be aware. Number 1, the growth. Number 2, the moat. Number 3, the people and culture. Number 4, valuation. Dlocal is a fintech company. They are like a digital payment bridge that connects global company to the emerging market. So think of them as a translator of money. So they make it easy for companies like Amazon or Spotify to connect local payments where there are people in emerging markets, they may not have credit cards. So why DLocal matters? Now think of it as a all-in-one platform. Now there are a lot of companies that wants to enter the emerging market like Latin America, Africa, and Asia. This causes an issue, and where most people lack credit cards, local payment methods can be very complex to even begin with. So with a single platform, all in one, what DLocal does is simplify the process. They manage the local rules and regulatory, so to get licenses, and it helps businesses that are expanding in this country to receive payment and send money easily, and therefore allowing them to expand globally. So what are growth opportunity that DLocal has? Now, if you look at the top right picture here, currently DLocal has more than 900 payment methods, and they are in 40 different countries. So what are the growth opportunities? How big is the market for the company's product or services, and how much can it grow? According to the information I got from Statista, the total transaction value in digital payment is set to reach 17 trillion in 2024. And currently, the total transaction value is expected to grow at an annual rate of 15.7% and to hit a higher amount of $36.7 trillion by 2029. There's definitely a long runway in the digital payment market. So what are the growth opportunities for DLocal? So currently, they are expanding into not only different countries like Argentina, Mexico, Egypt, Latin America. They are also expanding in Africa and Asia as well. They are expanding into like financial services, SaaS business, on-demand delivery, right? Then these are some of the sectors that they are currently expanding. So how do you keep vitality of day one even in a big organization? That's what Jeff Bezos said in 2016 letter to Amazon shareholders. What he's trying to say is, can the company create new product or services over time into the new markets? For example, like Apple, when they started with computers, they moved to iPhone. Currently, we have EarPods, Apple Watch, and the latest Apple Vision Pro. In the beginning, where they focus on payment solution to bring global tech companies to enter the Latin America. But as they expand, they realize that more international company wants to accept local payments in different countries. And through this, they even had partnership with global tech companies like Uber, Spotify, and others. And given that they have the technology right now, they can support local payments method beyond credit cards, such as bank transfer, cash payment, and even the local digital wallets. Introduce fraud detection prevention mechanism. What DLocal wants to is to promote the ease of use to the merchant as well as the merchant's customers. In 2024, the CEO of DLocal, Pedro Arnaz, said the smart request function actually helps the merchant to increase the conversion. The customer of those merchants actually helps to make more transaction and conversion, leading to a 1.2% improvement. And all these are being done by the machine learning model. DLocal has actually been improving themselves through the services. Now here's my interpretation of how DLocal serves the merchant. Now you must understand that in the B2B space, What does the merchant want? Merchant wants to enter new market. Merchants wants to have a peace of mind dealing with the regulatory, because you are talking about money and transaction, money laundering, fund safe. So when they are entering the new markets, they will want an established partner to actually help them to solve all these problems. Can DLocal help? Well, what they do is they get the merchants to pay them a premium, and this premium itself helps them to set up the structure and license. As the company promotes their goods or services, they attract more payments acceptance. The client base grow, there's actually more transaction that flows through DLocal. Once this cycle is completed, they'll look to explore even further in the emerging markets. And in the emerging space, there are definitely competitors. So in order to value add to the customers, here's what they do. They started to add a suite of offering like smart routing, fraud detection, unified reporting. The merchants themselves, they can also get their own license instead of relying on DLocal. So this model result in a lower take rate of acquiring costs. It enhanced the effectively means when the merchants expand into the market while working with maybe bank A, bank B, or different financial institution, some of the transaction can be linked back to DLocal and expanding their share of wallet. And DLocal is able to connect all this through their single API connection. Here, how the flywheel is changing as they are combating the lower take rates. Now, take rates are actually commissions that DLocal receive whenever a transaction flows through. So when they open new markets, it takes time and resources to introduce value-added service. But once the merchant has successfully gained a foothold in the market, local may face negotiation of low take rates, which actually happened in the past few quarters. And in order to combat this low take rate and make their services more stickier, they introduce the value-added services. And through this, more merchants will stay in the local platform, allowing even more transactions to go through. Let's move into moats, which is the competitive advantage that the local has. I actually list out 8 different kinds of moat. Number 1, economies of scale. I'll give you a high power because the local structure with tier 1 merchants, which are the global merchants, when they hit certain volume, they negotiated lower fees and pass the savings back to the merchant. Now, why is that so? Because the initial phase of entering a market may be very complex and costly. Number 2, network effect. I also give a high power because with various sectors like e-commerce and SaaS and the expansion into 40 different countries, the pay-ins and payouts were able to provide FX competitiveness. Now imagine when more and more of the merchants require the same currency, the amount of liquidity and amount of bargaining chip that the local have on their side is able to match and provide even greater savings and value to the merchants. So therefore, when more merchants join on board, these effects will take place even faster. Number 3, switching costs. I'll give you a high power because the local actively seeks regulatory work. These are constant work that the local is trying to provide. They want to give merchants who are yet explore into different emerging countries to actually lay the future pathway for some of their merchants, and the merchants will have to comply in the market they expand in. The thought and benefits about moving out to various competitor may not be as straightforward. Number 4, branding. Mouth power, because the local doesn't command a very high take rates against competitor. Right? Neither do the local lock in a long-term contracts with the merchant. Nice company like Amazon, Spotify, and Uber, which has already been working with the local, it might attract other competitors to explore this option with the local as well. 5, process power. I give it a mile because again the rise in the total payment volume, licenses, and backend capabilities, and over time it showed me that the local actually has the processing power as they onboard different size of the merchants. And this is a very unique competitive advantage that the local has, because once the licensing requirement is approved, the merchant can have a peace of mind to work with the local in the long run. Number 6, cornered resources. I give you a power because currently what I observe is that there's a low employees share-based compensation, and I believe the local has a room to hire top talent given the recent focus on back-end capabilities. Counter positioning. So I give it a low power because in the competition landscape right now, the application for license comes with regulatory costs. What competitors has to do is to actually apply the license, pay for the regulatory costs, and they'll be able to operate in the same market. Number 8, proprietary data. I give it a high power because currently Dlocal launched smart response to help merchants get better exchange rate that increase 1.2% of their revenue via the machine learning model. MoneyGram is in the business of remitting money for peer-to-peer. And when Dlocal onboarded MoneyGram as a merchant, here is what the analyst actually asked. Conversation look like, how do you feel is your competitive advantage with your remittance offering? And the CEO replied, looking at the infrastructure speed of the payout, FX competitiveness, and the availability of liquidity, which tied to speed, is what Dlocal is unique. That showed us clearly about the competitive advantage that Dlocal has. So from the Q2 2024 earnings call, the analyst also asked, what's your moat given there is an attractive pool? Why wouldn't competitors like Aiden and Stripe come after the market? And here's what the CEO replied that caught my eye. The local API layer, which is the technology that they had, and their white license, the regulatory work, is what attracts merchants to work with them and choose to work with them in the first place. Dlocal is very focused in the emerging market, whereas Aiden and Stripe are actually focused more of the developed market. The local network effects is actually high because Aiden and Stripe are actually in the developed market to reach out to different markets easily. The more the local applies the license in the various chain or markets, it allows merchants to expand easily with them. And therefore, merchants find more value staying in the network with the local. So now let's head over to the finances. With the Q3 2024, here are the key highlights. Total payment volume has gone up 41% year over year and 8% quarter over quarter growth. And cross-border reaching 3 billion in the quarterly mark for the first time. And of course, gaining new merchants on board. And the net take rate has been stable at 1.2% since Q1 2024. And of course, they have worked with various partners in example, NewPay in Brazil. The key matrix that the company is looking. Total payment volume has hit 6.5 billion against the previous quarter of 6 billion. That also leads to a higher gross profit and the adjusted EBITDA. Now let's take a deeper look at the revenue. Dlocal is relatively a young company. 2019 to now, the company has grown from 55 million to about 729, and we can see that there is current double-digit growth of 25.6% and the CAGR of 72% over the past few years. It's kind of expected given that there's many fintech companies that we can choose to invest. Now in this picture here, we can see the quarterly total payment volume. Every quarter is growing given that they have onboarded more merchants over time, and there's also more transaction taking place, and therefore a matrix that Dlocal has presented where the more transactions take place, the more processing fees Dlocal earn as a revenue. Whenever Dlocal expands into new country, they will need to grow their capability, whether it's hiring people, whether it is the technology, or whether regulatory costs, because they need to serve the new merchant. And every time Dlocal goes through this expansion, there is all these are known as the investment capex that's needed. And throughout this cycle, you can see that Dlocal free cash flow and margin is not on a constant upward trend. It's weakens. The margin actually swings down, leading to a lower free cash flow and lower margin percentage. We can see in 2023, it has a free cash flow margin of 45%, and currently, last 12 months, it is at 23.1%. But in the long run, when this is completed, the customer gets stickier with Dlocal and staying into the local platform. Flywheel effect will take place, and Dlocal will be able to get more revenue in the long run. Tabulated in some of the past few transcripts, Dlocal's strategy and direction is that they really want to invest heavily in tech, and in fact, they have been adding headcount. Now, given that all the headcount are coming in the tech side, what they want to do is to give confidence in the back-end capability, and the gross profit itself will eventually rebound, as seen that this OPEC, this spending will be able to build internal mechanism and technology for their long-term success. So I'm guessing that there can be a one-off cost. So once they establish the internal mechanism, I believe, as was mentioned here, setting up for the long-term success. Now let's take a look at DLocal's financial health. DLocal demonstrate a strong financial health with a cash position of 674.5 million currently. Debt to equity is practically zero. The short-term working capital that is needed, and the current ratio of 1.5 times, which means able to meet their short-term working capital needs. And it indicates ample liquidity and no reliance on debt at the moment. What we see here, where the cash debt, given that there is room for DLocal to actually borrow money in the future for expansion. Let me know what you think about DLocal's balance sheet. Do you feel comfortable given what you see so far? Here are the key risks of DLocal. Currently, the top 10 merchants contribute a big chunk of DLocal's revenue, and the management are fully aware of it for them to reduce the reliance on top 10 and 25 merchants. Given the regulatory landscape, the moment the government or the institution says that they have to comply, they may lose the merchant anytime. This may result in a drop of the total payment volume that's going through DLocal's network. Global digital players, the size of it against other tier 2 or tier 3 smaller merchants, it will take time for the concentration to go away. But there are improvements, and the management is actually expecting the improvement in the next few quarters, but they don't anticipate this deconcentrating very, very quickly. Competitors to DLocal, we have Stripe, we have Aiden, and we have PayPal. And currently, Stripe is a private company. Aiden and PayPal are the listed company. In this chart, this is PayPal's take rate. So over time, since 2019 to 2023, PayPal's take rate has gone down from 2.3% to 1.8%. And why is that so? Because over time, we have competitors like Stripe and Aiden coming into the marketplace. And that's why even for PayPal, with the new CEO, they are actually doing a lot more partnership and value-added services, not just for the merchant, as well as the consumers. You see for DLocal, the net take rate currently is at 1.2%, slightly lower than PayPal. So we can see from these two slides, Aiden is actually in various countries as well, and they have dominance in Europe, which is very different from DLocal. Look at the people and culture. For crisis management, back in November 2022, Muddy Water, a short-selling company, released a research DLocal, and it punishes DLocal for its accounting practice and reporting. So in short, what they are targeting towards DLocal disclosure, control, and the client funds. It resulted in a plunge of the share price back then. And what the DLocal has done and its management is that they did share buyback. They committed 100 million to buy back its shares. At the same time, proposed internally, whether it is the president or the board members or founders themselves, to actually buy back the shares on behalf through the company's employee plan. DLocal and its management wanted to do this to boost the confidence in the marketplace. But guess what? But we know that incident by Muddy Water, the damage done, and buying shares itself is not enough to bring the confidence back. There's a change of the CEO, the CFO, as well as a new COO. It has already been done, and there is a management shakeup. And currently, I think this shakeup is necessary given the experience that Pedro now, Mark Ortiz, has in their previous company. Example for Pedro now, we know that he's from Mercado Libre, and he has been there for more than 12 years. Most are direct control of what is seen in the past 2 years. Currently, what I like to see is the execution from management to grow more businesses rather than the capital allocation to do share buyback, improve the current situation. One of the very important aspects of the framework is to dive into the people that is actually managing the company. Pedro now has been with Mercado Libre for more than 23 years. We are looking into the background. Here's a very important fact. I want to know if you serve the same customer base. Now we can clearly see that Pedro now is pretty qualified because he has been in the marketing and sales. He has been in the customer operations, which deal with the customer relationship on the ground. He has also deal with investor relation as well to manage crises. he has also been a CFO. So CEO space, managing a fintech company who has, I believe they have covered the same customer space, allows out to reach out to not only to represent the company, but is able to recent earning call transcript. He's very sharp, he's very clear about the plans, and he's able to assist analysts to bring more clarity about what DLocal does. For Mark Otis, he has been with GE, which is a bigger company than DLocal, for 29 years. And the role of the CFO is able to help the CEO in the strategic planning, budgeting, and analysis. He clearly has experience as a CFO previously, and this I want to see as their partnership take place with the new CEO as well. Now here's the latest update that I got for DLocal is that they also have a new COO. DLocal is strategically planning to actually scale. Back at MasterCard, with a giant in the payment space, obviously has goal for scaling and managing global P&Ls, effectively growing more teams and segments as DLocal is growing. So currently at this stage, DLocal strategy is to expand a new market, and I believe Port to actually bring in his previous connection. Now you must understand that sometimes higher management join a new company, they don't just bring themselves, they bring a team of people and their previous relationship over, so that if there's any share reward or KPIs that's being established, they have a better chance to hit. Why would somebody established position head over to a smaller company if they don't see the bigger reward at the end of the day? Now let's go to the culture part. Here's what I got from the Glassdoor. I have one picture on top, which is a slightly negative review and a positive review. So when you take a look here, we have from 6 December 2024, there's a software engineer that says these are average IT company. So fully remote, there's a good career path, there's new technology that he's exposed to. But look at the cons part here. There is no social budget, no equity for all employees, no bonuses. DLocal, because currently DLocal does not have very high stock-based compensation going on. They do not have very dilutive. And this is clearly a sign for DLocal to grow, because if they want to keep top talent at some point, they either have to increase the salary or they have to issue equity share base to keep them. Look at the positive aspect where there's culture part. There's a great environment. Everyone is very approachable, appear to the C-level, right? And it's a very fast-paced company. Now take note that over time, when there is a short selling happens and the management take up, I will not give very high credibility of what I'm receiving so far. But do take note that a successful management is not enough. You need company. A great culture is what makes a company strive during difficult times, company towards innovation, towards crisis, towards opportunity. Currently at the valuation stage, discounted cash flow model to get my intrinsic value. So here are the assumptions that I place in. Number one, the estimated revenue growth rate. DLocal is currently growing at above 20+%, and I have actually placed in 25% on my bullish target, 20% on my average target, and 15% growth rate on my bearish target. And currently with DLocal spending on their capabilities, hiring more tech talents, as well as expanding license with regulatory costs, cash flow margin to hit a higher level within the next 3 to 5 years. And therefore, I have actually placed a more conservative free cash flow margin of 20%. Getting a exit of free cash flow ratio of 25 times. The good news is that as the management has been doing share buyback, as the management had proposed to do share buyback given their excess cash, 2% reduction in the shares outstanding. Being conservative, I also apply a 15% margin of safety to all my target prices. So for the bullish case, is $21.35. Average case is $17.41, and bearish case at $16.56. A position in DLocal at an average price of 8.96. DLocal is expected to have March 16, 2025. And if you enjoy this video, do like, share. Let me know your thoughts in the comments below. What do you think about DLocal? See you in the next video.